Hi guys. Today you've caught me working at home in my home office, and I hope that's okay. I live here in Fort Mill, and what my weekly tip to you is this week is to talk to you a little bit about the things that affect your mortgage interest rate. So you will have an idea of how this industry works and be a little bit knowledgeable when it comes time for you to do whatever you need to do. The first thing that a loan officer will ask you for is your name, your social, and date of birth, and your address. They need all of those things to be able to pull credit, because your credit score is instrumental in your interest rate pricing. For instance, if you have a score below 640, it's going to be very difficult for you to get a loan in today's market. It used to be 580, they increased it, and some programs, very limited programs, are at 620, but 640 is a good baseline. And if you're at between 640 and 680, you'll get one price. 680 to 700 is another price, and so on and so on. The best pricing occurs when your middle credit score is above 740. And when I talk to you about your score, please don't go to annualcreditreport.com and pull or pay for your scores. The reason being is they're going to inflate those scores, because what they don't tell you is that scoring is risk driven based on what type of industry is requesting the score. So for instance, a mortgage pull is going to be the most restrictive out there. Whereas if you go to buy furniture or appliances or whatnot, it's not going to be as restrictive. And furniture and appliances only pull Equifax in our area, because that's the East Coast. When you go to a mortgage lender like myself, we're going to pull the entire country, which means 3 repositories: the East, the Middle, and the West Coast, because we really have become actually a worldwide economy, but for us, for our country, pretty much is for the whole country. I use the middle score. So if your middle score is above 740, you're going to get the best pricing. I can't price anything without knowing your loan to value, the number of units, and your credit score. And once I know those things, then I can give you an accurate credit interest rate. Whoa, tough day. And a really good quote that you can rely on when you're moving forward, be it a purchase or a refinance. Loan to value is determined based on the amount of your purchase versus your loan amount. Maximum FHA is 96.5% of your purchase price, your loan amount. VA is 100%, USDA is 100%, and conventional is 95%. And then based on how those loan to values either decrease by 5 percentage points or more, affects your pricing as well. So hopefully you've learned something today about how an interest rate is derived. And when your mortgage lender, and I hope that's always me, says that they need things, they really are being truthful with you and just trying to give you the best possible quote that they can. It's in no one's best interest to do, I guess what the term is, bait and switch. It's in no one's best interest to do that. So just know that the market is extremely volatile, and until you actually lock your rate, until you sign something or your mortgage lender tells you your rate is locked, it is subject to change. Because I tell everybody I live in Vegas, because 1 minute the market's up, 1 minute the market's down. And when I talk about the market, I'm talking about mortgage-backed securities. I'm not talking about Dow Jones. So, and that's a specific market that I pay a lot of money to keep in touch with on a very regular basis. So let me help you with your purchase or a potential refi, please call me, Janet Gaglione, Newbridge Mortgage, the Mortgage Lady, 704-608-4139. Thanks.